Hello, YouTube. Another day and another fail. And we're talking about failed breakdowns. What happened today is we pushed to a lower low and then recaptured it and actually now have a bullish engulfing daily candle, which is what? It is bullish. So today we're going to talk about exactly what is happening because today we're pushing back into greed. We are now at 57. Yesterday we talked about how we were at neutral. And even though the market closed down, we actually ticked up. And now we're into greed. So is good data good or is bad data good? We got initial jobless claims coming in negative, which means bad data. That led to a rally today. This is important because tomorrow, as the market is closed, we're going to be getting ADP non-farm payroll and the unemployment rate coming out. So please make sure to drop me a comment and tell me what you think. Are we currently bullish or bearish? So we look here at S&P, we note that we now have a bullish engulfing daily candle. By definition, the only way we can actually get a bullish engulfing or engulfing yesterday's total range is by, first of all, starting with a breakdown, failing to break down, and then rallying up. We're currently digesting yesterday's high at 408.7. We look here to QQQ, and what do we have? Well, we actually have a failed breakdown, but we don't have the higher high quite yet. Also, we are battling for our one-day uptrend. That is really important. I'm going to ask you for a huge favor before we go further. If you could please consider smashing that thumbs up and subscribing to the channel if you're new here. We would really appreciate your support, and I'm going to thank you ahead of time. All right, moving forward, we talked about the bear squeeze on the S&P, but is there another clue for when and if we're going to get a bear impulse move so far? Let's look here to hollow candles. And I know this is hard to look on screen. Just bear with me because I think you're going to enjoy the commentary I'm going to provide here. We look to the beginning of the year. So we'll look here to January, and I'm looking at this period here, this big box. What I'm looking at is when the bears actually got a wave lower and how many days it was. Here we're looking at full red candles. Full red candles mean that, first of all, we closed lower, but also that that we have a red day versus the previous session, but then also that we're actually closing lower than we opened, which means what? That's called deflation. So for expanding, when we're going higher with hollow candles, this is the opposite. So what do we have? Well, we got 3 right here, and then what? Up. We got 2 dead cat bounce. We got 2 dead cat bounce. We got 2 dead cat bounce. We got 3. That's the low. Oh my goodness. So today, earlier, when we were red on the day, I told our group, again, if you want to follow me, we got 14 free day trial. You can come trade with me, Justin from YouTube, at theelgo.com. But I'll give you the highlights here. I traded this today. I bought the breakdown. Why? Because I thought it's what would happen. So after we got that move starting, the failed breakdown reclaim was the most important thing for me today. Then we got through the second low, and then we went for the relative high. So this means that if we would have gotten 3 red days in a row, and then we fail to get more downside after that, what happens? Well, probably up. I'm not saying I am 1,000% sure on this. It's just my working theory. So you need to have a working theory to have an edge in the market. We also talked about how our seasonality chart tells us that as long as we keep going higher, we're probably going to go higher more. So all we have to really do is go sideways into the 18th, which is going to be just after banks kick off earnings on the 14th. JP Morgan's going to be kicking that off. So on the 14th is when we have earnings season kicking off, and I'll be watching closely for that. A few more things I want to quickly go through. Let's look here at the weekly chart because you might not even know it. We're only down by 77 cents right now, or 0.2%. We had Jamie Dimon saying that we're going to have a banking crisis for years to come. We had bad news. Looked like the economy is going into recession. Market doesn't seem to care. We're in a doji. 408.85 is where we opened. 408.6 is where we are now. And we talked about how there is finally some breadth coming into the market. QQQ is still holding 303.05. It is still holding the high from 2 weeks ago. It bounced off of it. It's the low this week is 312.82, which roughly corresponds with our 38% Fibonacci retracement and a pass. It's a dead cat bounce for now. We'll have to form a higher high and a higher low next week to confirm this was it. Volume is also solidly bullish. So if we think about what happened this week, let's look at the heat map because this will tell us a different story. What do we see? Well, product manufacturers like Caterpillar, Deere, right? Those are all red. Why? We're expecting a recession now. So when the recession is going to come, people don't produce as much. They don't buy construction equipment. They don't farm. They don't do as much. That's why it's red. Tesla is also notably red. Financials are a little bit red. And some tech is red. What's green? almost everything else: healthcare, consumer non-durables, health services, energy, utilities, communications. So this is nice. We finally have some breadth and some depth. People are rotating out of tech, which is still bright green, into some of those sectors we just noticed are a little less green on the year, if not red. So something else to think about here is the GDP number we got revised yesterday, April 5th, coming in at 1.4691. What does that mean? Expansionary territory for Q1. We cannot start a recession until at least Q2. Also, that number's been revised lower. So when it gets revised lower from about 3 to about 1/2 at 1.5, what I am really wondering now is whether or not the value we got of 3 is actually not correct, or if now that growth is going to go from Q1 to Q2, meaning it's going to be accounted for into Q2, which would what? Hey, maybe we can eke out a gain here. Remember, this is year over year. So for Q1, we're comparing to Q1 of last year, where we were what? 0.37. Q2 of 2022, which is what we're going to be comparing to right now, it's negative 1.2. So if we have any growth this year that's not negative, that's going to be a positive quarter, which would mean what? What? Recession can only start into the third quarter or 3 months from now. That is a very, very long time. So with that said, if you want to watch the weekend video that should now be queued up here, if not, come hang out with us for the final hour. Me, Justin from YouTube, we're going to be streaming for the final hour. If not, thank you so much for watching, and I will see you on the next video. Thank you.